Hey guys, John Pauly here, Actionable Intelligence. I saw a couple comments in the videos that I've made in the past, and it kind of made me think about some things that I wanted to put out to you guys or talk about. And I think when we're doing investing or speculating, we need to understand that we actually do have some advantages over professional investors, professional money managers. And I'll give you an example right now. Let's take a guy like Warren Buffett, okay? He's running Berkshire Hathaway. And let's take out of the picture the fact that the value of all of the operating businesses like Mid America Energy, Union Pacific, Dairy Queen, all that, let's put that off to the side. Right now, Berkshire Hathaway has $100 billion in cash, okay, that they want to deploy into investments. It's just earning very low yields in cash. So let's take the situation with like an industry that we are investing in or speculating in, uranium. Now we've done a lot of fundamental analysis on uranium, so I have a lot of people, and we have our view that over time the uranium price is going to go substantially higher. The advantage we have is that that's an industry that when it turns around I've talked about before, you could change your net worth by two or three zeros being added to your net worth. It's going to have rip your face off returns when this thing turns. Some of these stocks are going to go up 1,000, 2,000, 10,000%. The problem is for Warren Buffett, he can't play in that. He can't get in that, okay? He has $100 billion in cash sitting there, and the entire market cap of the publicly traded uranium space is about $5 billion. So he's dealing with such large amounts of money that he can't even get into markets like this and deploy cash. I mean, even if you wanted to come in with $1 billion, that would move a lot of these stock prices, 25, 30, 40%, 50%. He just can't do it. Not only that, he can't get sufficient money into the industry or into these stocks that even if they did go up 1,000%, it still would be immaterial to the overall returns of Berkshire Hathaway. So he's limited by, in the areas, not only him, but many other money managers that are dealing in billions and billions of dollars under management. They simply can't play in these areas. So that gives us an advantage because we can get in and, I mean, I'm not saying that hedge funds or professional money won't come in. It will, but it just won't be at the levels like these people are dealing with, like Warren Buffett or some of these other big money managers. Now, Warren Buffett has said many times that this is where the advantage comes in. He has said many times that if he was just running a small fund, he could easily make 50 to 100% a year on his money. And I saw that quote and I was just like, man, that's a pretty bold statement. But actually, it's not really that hard to do. And I know that sounds, I don't want to sound too carnival barker here or get expectations set up, but if you are willing to do the work and get in there and find undervaluation, it exists in any market. And if you're able to expand your view worldwide, you can make pretty decent returns year in and year out. You just have to go out and find the areas of undervaluation. We've talked about this before. We're looking for areas of undervaluation, things that have been beaten to a pulp, that have been given up for dead, yet they have some near-term or intermediate-term catalyst that's going to change the market perception of this particular industry from bad to less bad. Okay, let me say that again. So let's use uranium as an example. Everybody hates uranium. I know it's, people watching this video or people we interact on Twitter, it's a small group of people that are actually interested in this and actually see the fundamentals like we see them. It's not, the general market doesn't see it that way. So it's been left for dead. It's a necessary industry and product, and the fundamentals show that it's not a if event, it's a when event. So being able to deploy capital in there and seeing that and identifying that and knowing that everybody that wanted to sell uranium has sold it. So really the only thing that it can do is go up at this point. Yes, if we have another Fukushima, that would be disastrous, but that's really the only other risk that's really out there. I mean, this thing is going to go. So That's why when he makes a statement like that, I can see what he's saying and I can endorse that because I just closed out a trade, for example, in the Egypt ETF. This is something that I saw as devaluation over a year ago in Egypt of the Egyptian pound. The stock market over there crashed, but there was catalysts in place. There was a new regime there. They got rid of the Muslim Brotherhood. They were going to implement IMF reforms, economic reforms. So this, coupled with a devaluation, historically in other areas, has led to healing of the economy and a consummate rise in that economy's stock market. Now, that wasn't guaranteed that was going to happen, but the cards that were dealt to me, this scenario that I was looking at, I have seen in the past it work out, so the odds were in favor that would work out again. That was not guaranteed, but using proper positioning sizing and proper stop losses, I'm limiting my risk. And in fact, we just closed the position out the other day for a 42% gain in 13 months. And we've rolled those proceeds over into the next country that I think is very undervalued. And I've written about that, and I'll put a link to the article. So being able to get money into areas where professional money managers can't is advantage number one, just because the markets are so small and they just can't get money into it. They would move the market themselves, or even if they could get money in, it won't materially affect their returns. The other advantage is the ability to arbitrate or have time arbitrage. And what do I mean by that? Okay, for example, if you're running money, professional money, you're a professional money manager or a hedge fund manager. In the old days, people would give you some leash, they'd give you some runway, give you a year, 2 years, whatever, to see what you could do. Now it's quarter by quarter. Everybody wants quarterly performance, and if they don't get it, they'll pick up their money and go somewhere else. So even if you could get money, if you're a professional money manager running money for other people in a hedge fund or whatever, or a mutual fund, and you could get into something like the uranium market, you can't do it because of that, because you don't know. They can't sit there and wait. Their investors won't allow them to wait until that industry turns around. Is it going to be 6 months? Is it going to be a year? Is it going to be 18 months? Is it going to be 2 years? Okay, people aren't going to sit there and not have any returns while they're watching on the news. They say, these FANG stocks or Netflix or Nvidia or whatever is up 120% over the last year and a half, and you've got me in uranium stocks. Guess what? You don't know what you're doing. I'm taking the money away from you. That's what'll happen. So we have the ability to have time arbitrage. We are not beholden to anyone as individual investors except for ourselves. And we understand, based on our reading of history and previous bull markets in uranium, that if we are correct, and we think we are, and the odds are in our favor that we're correct on the fundamentals, that when the thing does turn, the returns are going to be so great that it doesn't matter if we had to wait a year, 18 months, or 2 years. It's still going to be life-changing. As I've said before, when a uranium bull market happens, you have the ability to add 2 or 3 zeros to your net worth. But for the professional money manager, he's living 3 months to 3 months. He's got to go back to that oversight committee or his investors or his limited partners, and they're going to ask him, why do you have us in uranium? Those stocks are down 10 or 20% since you bought them, and you keep telling us it's going to turn around, and in the meantime, the overall stock market's up 30 or 40%. What are you doing? So that's why that's another advantage that you have. Like I said before, Warren Buffett has said many times that if he could run a small fund, he could easily get 50 to 100% returns every year. And I believe that, just based on some of these previous turns in these cyclical markets that we're involved in. So those are just two advantages that we have as individual investors or speculators. And I think that if you understand that and then you use that to your advantage properly, you will be able to enhance your returns. You will understand why it takes longer for some of these markets to get going, and when they do get going, money will come into them. But the big operators just cannot operate where we operate, and that gives us a big advantage. Okay, and also the fact that we have the ability to arbitrage time and patience and wait, which they don't, because they're constantly got a gun, they got a revolver to their head, where their investors and their limited partners and other folks that are putting money with them are demanding returns on a quarter-to-quarter basis or else. So that's just a video for today, guys. Just wanted to get that out there. I think some of the things I see in the comments, I want to make sure people understand that we are operating with some advantages and trying to point those out to guys. So appreciate all the comments I'm seeing in the videos comment sections. I try to answer all the comments and questions. And if you guys have any input into videos or articles you want to see me write, I'm happy to take that under consideration. This whole channel is for you guys' benefit. And check out my website, Actionable Intelligence Alert, and check out some of the articles we've written there. They're pretty informative, and I appreciate the support and the continued, the channel continues to grow, and it's all because you guys keep watching. So thanks a lot, and we'll talk to you later. Thank you.